Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that mega pump on the Bitcoin chart. So let's just get straight to it. Now, guys, I do want to just give a big congratulations to the Alpha fam because we are absolutely killing it. Guys, let's throw on the 6 hour levels that we had in the last episode. Of course, we were chasing this broadening descending wedge, and I told you there's a high likelihood that it will break to the upside. Now, it did have an extended shoulder over here, but that's no big deal. We've seen this type of extending arms in the past with head and shoulders and with broadening wedges. It happens all of the time. What we're looking for is for a flip on the top side and then a pump, right? And that's exactly what we got. Now, if we throw on our old 6 hour levels, what you can see is that we respected them to the dollar accuracy. Look at this, guys. Let me just zoom in. And if we were looking at the hold current momentum and the additive and subtractive momentum, we never really put any solid candles underneath those levels. Our chart wanted to hold on to the alpha momentum pool, and so we never broke down from it. We had a nice wick up and then an engulfing candle, and that suggested that we were going to have a pump to the neckline. After breaching that neckline, we did a retest, not of the neckline, but of our hold current momentum level, just showing you how significant these key price levels that I show you to watch are. And what did we do? We ended up closing the candle above that and pushing all the way to my general continuation. We also got a wick to the volatility pivot, which is, as you guys know, if you've been following this channel, the most critical line that we need to conquer when we're on top of a momentum pool. We should also have the volatility pivot at our back. And what happens when we have both the momentum pool and the volatility pool? Boom, guys. Boom. Okay, so you guys, right? The Alpha Fam is just absolutely killing it. Guys, this was a huge play, okay? We've been waiting for this. This was the setup that I was giving on the charts, and we absolutely knocked it out of the park. If you were in that, you got a nice 2% move. Why is that significant? If you're on 5x leverage, that's 10%. If you're on 20x leverage, right, then that's like a 40% move. These moves are nothing to sneeze at. But more importantly, that brings us back in the range of this price action that I was suggesting that is similar to a cup and handle. Okay, yes, it's all janky, it's all warped, it's all distorted, right? You don't really call that pretty or anything, but what we can see is that the price action in general has a configuration of similar in nature to a cup and handle. And so I'm looking to breach this neckline. I want us to flip this area somewhere here around, conservatively around 30,100, and then too generously around 29,900. We get some nice price action flipping this area, right? Get a couple 4 hour candles closing up there, or just get some chunky price action and then taking off from there, which could lead us to a measured move all the way up to 32,000, where we're probably going to butt our heads into some serious resistance between 32 and $33,000, and then we're going to have to reassess the charts from there. But guys, again, the key point here is that the alpha momentum pool and these key price levels to watch that I'm putting out on the charts almost on a daily basis are extremely significant. You guys are seeing the proof in the pudding. You see how bulls took control straight across this level. And let me just put this on a 30-minute, maybe even a 15-minute, so you can see. Look at how this candle came all the way up after grabbing the volatility pivot. It came all the way up, and look where it stopped, almost to the penny to the bullish control zone that I had marked out. And so it tested the bullish control zone. It had a pullback. That was a bullish pullback. It didn't do a 50% retracement. It was a bullish pullback. And then we just continued to go. And so, guys, like just time after time after time after time after time after time after time, these key price levels to watch have been respected. And so having these on your charts can give you a significant advantage over the rest of the market. And that's why I employ them for you. That's why I present them almost daily. And that's why the Alpha Fam is absolutely killing it. Yes, we could have broken down. Nobody has a crystal ball. Nobody knows what could have happened to price action should we have broken this previous low. Probably we would have come down, maybe tested that wick, probably we would have come down to test the neutral point of control, at which point we either would have pumped or we would have dumped from there, and then bears would have been in control at 783.0. But guys, that's not the point. The point is that we held on to the key levels. We never lost it. We never lost the local low. And so when we had a higher low, we're looking for that potential uptrend, and these key levels have been our guide. I'm not saying that I'm fortune telling. I'm just saying that we identified a broadening descending wedge, and that that has a statistical likelihood, as I pointed out in the last episode, of breaking to the upside. And that, as I said in the last episode, if we were able to flip that, then we'd have a chance at getting back to these key levels. And this is what's going to give us that chance to get to $32,000 or $33,000. And as you can see, we are starting to puncture that zone as bulls are now in control on the 6-hour, as this pattern that we correctly identified is playing out. So guys, let's go ahead and just update these charts. Of course, these were the old key levels to watch. Let's throw on some new key levels to watch, because new day, new chart. And we can see that we are, of course, here on the 6-hour. Previously, we were looking on the hourly and the 15-minute just for detail. But on the 6-hour, which is a pretty good time frame to be trading on, if you want to be able to sleep, guys, we can see that bulls are in control. Of course, we may need to have some type of retracement to test support. And so if this candle comes back down, the key level that we want to hold on to is 29,600. As long as we're above 29,600 on any type of retracement, then not only are we still going to be essentially in the bullish control zone, maybe just a hair below it, but more importantly, we're going to have the volatility pivot at our back. Now that should come up a little bit, so probably just conservatively you can say 29,635. But we're really splitting hairs there. That kind of $29,600 area is what you want to be looking for. We'll probably have a general continuation to the upside as long as we're above 29,410. So let's say that we wick below the volatility pivot. We might get a second chance as long as we hold this level. As that's also going to be the top of our momentum pool, I tend to use the continuation line when the add and subtract momentum and the hold momentum lines are essentially on top of each other. But yeah, we don't want to lose 29,216. Otherwise, we're going to retest the center of the RSI at 28,917, and then bears could gain control at 28,012. Now, I don't see that happening. Okay, I think this bullish structure is playing out. We're having, if just on a candle closing basis, right? We have a low, we have a higher low, we have a higher low, and then of course we've just made another higher low. Bullish, 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 guys. So again, like if you're a bear, you are getting wrecked. And guys, the Alpha Fam is just absolutely killing it. Let's throw on our EMAs. You can see once again we are just above the 20 EMA, we're above the 9 EMA, we're above the 4 EMA. Bullish, 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 guys. Okay, that's what you want to see on the charts, of course, in the context of being above the 200. Absolutely bullish. Let's jump over to the day chart just to give us some daily levels here. And you can see that now that that kind of downward pressure that was on the 6 hour has been blasted through with a stick of dynamite, then we do have the opportunity for the daily bullishness to continue, which the daily chart never had the volatility pivot over its head. The volatility pivot has always been at our back, supporting us, lifting while supporting. And so, guys, we've really just been waiting for that 6 hour to kind of clear up. And now that it has, perhaps the daily has a chance to strike at its bullish control zone, which would be at 30,315. Now, we are starting to push here. Again, like we are above the 20, the 9, and the 4, all very bullish, and the 200 is way down here at 24,000. So everything looks so nice for the daily chart. We are sitting pretty on top of the alpha momentum pool, on top of the volatility pivot. We don't break back into the pool until we're under 29,250, and we don't lose that general continuation unless we're under 29,000, with the neutral point of control at 28,533. So all of these are significant levels. I don't expect us to be testing them to the downside today. But I would think that we might have an opportunity to just kind of range a bit between the neutral to the bullish zone. But I am biased a little bit towards just holding the momentum pool and trying to go for that bullish control zone. Why is that? Because we do have a weekly closing. Let's jump over to the weekly. And we can see that on the weekly chart, let me just get rid of the daily. On the weekly chart, we do have a very similar EMA structure here, right? We're above the 200, the 20, the 9, and also now we are officially above the 4 again. So bullish, 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 guys. And then, of course, our volatility pivot, unfortunately, for the bulls is above our head at 30,340. Now, this is probably going to be coming down, I would hope, with this week's close, and hopefully closing in 8 hours the week. I hope that that volatility pivot can be put underneath us. We will measure that in the next episode, but overall, you can see that we are in the bullish control zone on the weekly as long as we're above 28,650. And so if we can capture that volatility pivot at 30,340, which we're absolutely within striking distance of, we just have to take out these candle highs over here, then we potentially could see that continuation to 32 to maybe even $33,000. We don't re-enter the momentum pool unless we're under, let's say, $27,700, and we don't lose it unless we're underneath 26,925. At which point, this chart is seriously going to be questioning itself. Now, I don't see that drop coming here, but we have had a lot of bears trying to distort the message of what's going on in the markets, and they are trying to undermine your confidence in this market. But currently, I have to tell you that on the macro, I'm still bullish. Yes, last weekend I did show you the bearish case. If something went absolutely wrong, what we might expect in the worst case scenario, should we have some type of megalithic pullbacks on the macro. But this weekend I'll be doing another macro episode, and I'll show you my opinion on the bullish side, or I'll try to get that out this week anyway. But guys, I think I'm going to wrap it up there. As you can see, things are going pretty well, and all of these charts are aligning. The the weekly, the daily, and the 6 hour to the bullish side, with only some question mark as to when we're going to be able to recapture the volatility pivot on the weekly. But the caveat being that bulls are in fact in control on the weekly. So again, you can't just say, oh, just because we're below the volatility pivot, we have to be bearish. No, it's just that random volatility can smack us down. Okay, there's a much higher statistical likelihood that random volatility in the market can smack us down as long as we're underneath the volatility pivot. And so that's why we want to capture that volatility pivot. But we are absolutely in the bullish control zone. And so, guys, we are doing a good job, and it really doesn't make sense to be shorting under those type of conditions. But that's not financial advice. Leave that up to you. Great job on trading the broadening descending wedge, Alpha Fam. Again, as long as we just keep these principles to heart, then we should be able to be profitable in this market. You can see that retest, and again, I just want to throw on those 6 hour levels just to remind you, as we retrace here. We just don't want to be violating that 29,600, 29,410. But if we come back and do some retracement, that's not a big deal. But again, bulls are going to be in control above 29,635 on the 6 hour chart. Guys, that's your alpha for the day. Stay safe and happy trading.